And so the cock crows. Yes, how are we doing? It's Crypto Sniper. Yeah, we've been up since 6 in the morning. We're getting ready to roll. It's 8 o'clock. Someplace I have nowhere, no concept, no idea where I am. Just beautiful mountains, far away off grid. Far away off grid. Here's our digs. I was showing you the bike just now. But the big news, Bitcoin makes a new high. Bitcoin makes a new high. That's right. So saith the cock. He is crowing big for the Bitcoin high out here in the desert. Of course, it's the Trump trade. It's the Trump trade. You have a new El Presidente. You have another president supported by the ZIO, ADL, APAC cartel. Oh dear. Anyway, never mind about that. Bitcoin up, your CBDC on-ramp first generation token, new highs, kind of as on the broadening structure, the macro broadening structure. We pointed out, I think now it's 2 weeks ago, 20 days maybe even, that it broke the capping descending grind line. We came back out and said continuation to the upside. However, during this period, while you are at new highs, I'm also going to tinge everything a little bit and say, wow, at a macro level, things have never been so precarious. Of course, if Trump is in, they can cue events, dear boy, as they did pretty much on his previous presidency. And they like to have events take over. There was the whole Russia narrative. Then there was the events of March 2020 and the run-up into them and all of that we don't have to get into. Enough said. Here's what's going on in the economy. So Bitcoin, great, new high, Trump trade, friendly government. We can wonder and hope to hear if SEC, so I'm out in the desert, so some of you might correct me on this, but we can wonder and hear if the SEC head, Gainsler, has indeed, I saw a tweet that said, he's likely to be, or that he was, I'm not sure. So this is sus. It's just a tweet, it's not sourced, but maybe you guys will already know by the time you watch this whether Gainsler has been removed. Of course, he's not been particularly supportive of the crypto environment. XRP will tell you that, certainly. And a number of others, which even goes as far as Hex and Richard Hart having a court case, and a lot of other tokens, LBC, the library token we used to get for our reset channel on Odyssey. All of these guys got SEC crushed, basically. And we'll be seeing if there's a change that makes a more friendly environment for the cryptos. Of course, you've got the new high of Bitcoin, so that's fabulous. Let's change the scenery. It's beautiful mountains here. You can see the sun poking over here. As I say, 7:15. We've been up for about an hour and a half. Had a really fresh shower. It's cold outside here in the desert. There was hot water available, by the way. I just choose a bit of the old cold stuff. Let's show you around. It's proper rustic stuff. What I love about doing these tours, by the way, is there's no 5-star hotels, no business class. It is just old school. I'm gonna show you the bar. It's proper spit and sawdust stuff, and I just love it. I actually love it. I feel more home in good old farmer. Really good bed, warm blankets. It was cold. We literally had no door, so you're just covered, snuggled up like a bug in a rug there. And it's proper old school, and gas here, and it's sitting around the fire and all of this. There's a reservoir pool I'll show you my trusty steed while we talk about Bitcoin. So celebrate on the one hand, Bitcoin the new high. Okay, that's awesome. We're back above the mid 70s. Here's the ride. We're on Husk expedition 901. It's loaded up like a canteen on the back there, because we've got no support truck in this tour. It was cheap as chips, by the way. Everybody should be out here doing these riding tours. There were some great dirt roads, a little bit of technical session early on, but lots of other nice bikes here to be seen. There's Ryan who wants to photobomb the video, Wayne on his 701, KTM 890s, BMGSs, and more. But anyway, back to the story. There's hey, you see, even the senior citizens can do it. You make me young. Thank you. But here we go. Not cruising the surfboard. We're about so far away from the ocean as you possibly could be. But anyway, so back to Bitcoin. Yay for the Bitcoin new high. Okay, awesome. And it's still, it had a bit of a pullback after breaking the capping descending grind line of the broadening structure. That was the 20 days. Then it was to reassert. It did. It reasserted up. Trump came in. Happy days. He's the Bitcoin or the crypto friendly guy, supposedly. You guys will probably tell me if the rumor that Gaines is going to get booted is true. So you might have a more friendly house in terms of the crypto realm. Look at that mountain and hills. We're going to be hitting the road soon. Bit of a farmyard breakfast to enjoy. I love the geology here, by the way. If you'll see the rock strata, you can see that you get sedimentary layers that were warped. You get the valleys. You know, if you take a carpet and you push it up and you get those S's, it's kind of, this is the geology here. You see it unbelievably. So that's all great, but the macro is terrible, guys. Crypto guys understand the macro is terrible. And the likelihood, and I know you've heard this from me a few times, and it sounds a little bit like man cry wolf, ow, ow, yeah, sitting on like a coyote in the mountain hills crying wolf, but the employment numbers are shocking. People are cutting. Jobs are being cut. The stock market supervaluation, you've got Nvidia in 58 times sales when the previous high for overvaluation was Scott McNeely's company, Sun Microsystems, at 10 times sales, I think it was. Maybe it was 20, I can't even remember, but 58 is well past that. So you've got the equity markets hypervalued. Why is the equity markets hypervalued if the consumer and the retail guy is so wrecked? It's got nothing to do with you. The money is elsewhere. It's statist money, and it's money coming out of the bond market, which is why rates are so high, which is why mortgages for the 30-year fixed are at around 7% for the average man. This is why housing has never been more unaffordable. So you need for a 30% down, I think, and a 20% down payment and 30%, no more than 30% of your gross income being expended on property. You used to no more than, I can't recall exactly, that I think it was about before the rate hike started, you could buy a 758,000 home. Using 30% of your gross income with a 20% down on the average income. That's now fallen below 478. So you've gone from 750 to 478. The affordability index on houses, the people behind on their mortgages, never been higher. The credit card payments, you threw 1.1 trillion in total credit card debt, but you've actually got 660 billion of that. So you're talking about 60% of it. That is not even getting paid, is being rolled and added to on an ongoing basis. So you've got a wrecked consumer, and they know it, the Fed knows it. You've got a contracting bond market because the rates have been so high. Yes, you had a 2-point basis cuts. What happened? The 10-year just continued to go up. So it shows you the thing I've said on the Market Sniper channel and on this channel as well. The Fed does not, in the extreme cases, control the rates. The market does not agree. They don't want to buy debt. Do you want to own a debt item where you're going to get in 10, 20 or 30 years your money back, and there is a super high inflation rate and you're being paid less than that inflation rate in interest? No. I mean, it's imagine I say, lend me 100 grand now and I'll give you back, in real terms, 47 grand in 20 years time, and I'll pay you a stipend of a minor, low, badass non-rental rate at a relatively low interest rate, which in an environment where gold has been an absolute stalwart and could still do a 50% plus year. And never mind what could in fact be happening on Bitcoin. So this setup, it's great right now for Bitcoin, but I want to temper the celebrations of the all-time high with some degree of caution. Do not go all in long leverage and everything. There could still be the cry wolf, oh, demand a destroying event, because there is so much wrong, and they love to turn it all bad on the supposed right-wing candidate. So I point out, during the Bush years, he got the 9/11, he got all the crises, Trump got the CV-19, etc., etc. So it's kind of like they need to be the unlucky presidents who come in with great capitalistic freedom of speech, libertarian principles, and then they just happen to be overwhelmed with event risks that see them all suddenly having to become pharmaceutically advanced guys, or post-terrorism mop-up, clean-up guys that end up taking the nation to war, etc. As I've highlighted many times before, the military-industrial complex is a sales, promo, and marketing shop for arms. That's what it is. It's not a peace. NATO is essentially a sales rep force for the military-industrial complex. It's not a peace securing, defense only, making sure no one takes libs. It's a provocateur. It's a complete provocateur, and they are provoking. So you've got all these ready, good to go potential crises. You've got them on the BBC talking about a bird flu. You've got all these wars that are tinderboxes, from Lebanon, Gaza, Iran, right the way through. So they're keeping a lot of things good to go. They're keeping a lot of plates spinning, waiting for the new guy, the guy where everything has to go wrong, to show up, and then boom, they can pull this whole charade down in a minute. Now the question is, would Bitcoin go up? Would it be unaffected, or would it go down on a demand destroying event? And most people, most experts of many durations, 40, 50 years in the equity markets, you're talking those 80-year-old greybeards, are of the opinion that it's inevitable that the stock market sees at least a 30 or a 50% correction. Think about that. So stocks to get a 30 or 50% correction. What happens in that environment? Now, I still think gold will outperform, but it goes down. I'm not a blind gold bull. I'm not a blind Bitcoin bull. It will go down. The question is, which will go down least right now? Gold will actually go down least. Cash out of a bank, because if you have it just in a bank, what if this is a banking crisis? Let me tell you, the repo rates, these issues are all going to come back. Interbank lending is a massive, massive concern. All of these things are tinderboxes. So you've got a potential banking crisis, you've got a potential animal protein crisis, that we've got to kill all the chickens, the whole food starvation agenda. You've got the military-industrial complex that wants to suck out the final amount of bungs, money, and massive super profits by loading up on debt that will never get paid before they collapse the whole thing, and then say it was you, the consumers, you spent too much, you live beyond your means, and ignoring the fact that's everything that the government itself did. You've got all of these potential crises. So the problem is, Bitcoin is not existing entirely in a self-isolated bubble. I spent all of 2016, 17 and 18 in the crypto era, when everyone thought it was all just about crypto and it was own thing, saying you need to be watching what's happening on the debt markets, the T-bills, the global. And as it's become a bigger asset class, more people have realized that. More and more YouTube channels talk about correlation. Some think it's correlated to the NASDAQ because it's a tech. It's not entirely. The fact that you get high correlation is because liquidity that is pumped. It is a global, Bitcoin is in actual effect a global liquidity proxy. It's a global liquidity proxy, and you can actually map that. But so's the NASDAQ. So the reason that they both go up, it's a bit like I have a truck and I've got two tow ropes and I've got, a block of concrete and a rubber tire behind it. You would say the concrete block is correlated to the rubber tire because I'm towing them both with the truck. But actually the concrete's got nothing to do with a rubber tire, but because the primary influence is the liquidity thing, the tow truck, they're both getting towed and being dragged along. One will drag more efficiently than the other and will get a better performance, and one will hang heavy on the rope. But the fact of the matter is, they're not really correlated. They're correlated purely because of the truck. You sever the two and they have totally different purposes. So yes, and I don't think Bitcoin is unbelievably innovative either. If you wanted to make the case for alts, possibly, but alts are being ignored and Nvidia is running because it's an AI thing. So it's only really AI, and AI crypto kind of not done as well as AI Nvidia. So, you know, crypto actually has been an underperformer for its high beta. It should be something that be front running, given how much liquidity we've had, given how much Nvidia has pumped supposedly on AI. It's all about the infrastructure and the chips, clearly, because that's what they are and that's what they make and that's what they need. You can't say that we've had a crypto equivalent, which should be about 6 to 20 times more than Nvidia on a token. So in actual fact, it's been a little bit too high risk, and the key part of that, it comes back to the SEC and the uncertainty, because it's actually the institutional money that makes things run, not you. It's institutions that made Nvidia run. Druckenmiller was buying for many years Nvidia. It's the fact that everything is driven by the big money. Gold is running, not because you, the man in the street, I'm afraid. It's running because the central banks are dumping their dollars and treasuries for it, and are stopped taking the losses and are recycling their cash into something different, which they think will serve them better during this period. So it's the big money that moves the markets. And as I say, I don't assess that Bitcoin is a perfect proxy for the tech market. It's a liquidity general proxy. I want to associate the bouncy tire, the tractor tire that is Bitcoin, that is being dragged behind the truck, with the truck, not with the concrete block that is also moving alongside it. And the global liquidity proxy there has actually been more liquidity being made available despite the rates. And this is what we've also described as the fire and water principle. When you have a fire which represents the economy and it's burning in a line, they tighten the rates because they have to kill the value of the debt. So they pour water on the one end of the fire, but they also need to keep the liquidity coming in because everybody's getting crushed and wrecked by the rate increases. So they're adding a little bit of liquidity on the sly on the other side of the fire. So we spoke of this a decade and a half ago, how the day will come they'll be forced to devalue the debt by increasing rates, but they will not be able to take the pain of doing it. It's kind of like giving a heroin addict a heroin substitute. You want him off the heroin, but he can't bear to be off the heroin, so you give him something near to. So this is where we are. So celebrate the new high on Bitcoin. What's the message I'm giving you today on Crypto Sniper before disappearing into the dust? Celebrate your new high, but be an investor only. Have a point where technically a last big time frame lows, you have an exit, so that you don't wear a 30% pullback in the event of the stock market crashing, which could come on the bank of the banks, the repos, all the things I've mentioned, and more that I haven't had time to mention, that we deep dive in greater degrees. So well done, Bitcoin. Some of the other tokens have also probably done okay. I'm not here to give you the rundown. I've had a bit of problems accessing TradingView from here. The Wi-Fi is not that strong. I don't even know. I'm going to try get this uploaded while I'm eating breakfast to YouTube, so it's not going to be long video. But be careful for outlier downside events. Remember, the yield curve inversion has broken and reverted positive on all the yield curves now that are watched. You are in that stopgap moment where you're waiting for a name of your next crisis, plus you've got the president that they want to bring that crisis on. That's my take. So beware the downside risk. Enjoy your new high, but be cautious. I think there's a twist in the tail in terms of everything, and I think everyone should play safe. Until next time, thank you for watching and being a subscriber. By the way, some people are saying they're getting unsubscribed. Make sure you smash that subscribe. We're going to potentially be doing throughout the tour updates, and go and subscribe to the Market Sniper channel. We'll be giving other updates there too. And thank you again for your support on the channel. By the way, we went through 50,000. a couple of times we went to 50 and then they took us back down again. It's like, what happened there? A host of people unsubscribed or what? So by the time this goes up, you'll probably be writing in the comments, no, Francis, you're on 49,100. But thank you for all the support for getting us through 50k. And if you choose to share, it's an additional bonus, and we look forward to update more regularly. Till next time, it's Francis saying, be careful out there, enjoy your upside, have your stop losses even for investment. Do not be over leveraged. You could be wiped out. There could be an out of the blue downside event, and that is underpriced at the moment. Bye for now.